Hi everyone and welcome to another episode of Living on Blockchain. Today we are speaking to David. David Attermann, he's head of Web3 Investments at M31 Capital. David brings a wealth of experience from traditional finance into the crypto realm. He has previously co-founded Omnichain Capital and worked at firms like Kaisa Capital and Harbor West Ventures as well. At M31 Capital, he is at the forefront of investing blockchain infrastructure and middleware, focusing on the convergence of AI and Web3 technology. This was a very, very insightful conversation, especially if you're looking to raise in this market. I can't wait for you guys to hear this. Let's deep dive right in. Hi, David. Thank you so much for making the time to speak to me today. How are you doing?
I'm good. Thank you for having me.
The pleasure is all mine. So for our listeners, can you start with a little bit about yourself, your background, and how you got into this space?
Yeah, so I started my career in traditional finance, spent 10 years across investment banking, venture capital, private equity, and was at a hedge fund covering technology companies, but specifically started my career in the networking infrastructure coverage group in investment banking. And that niche kind of stuck with me as I went to the buy side, through kind of different early stage to late stage to public equity investing. And it was through that lens that I got initially interested in crypto, Bitcoin specifically in 2014. I saw the technology, after kind of ignoring it for a couple of years, I finally saw the technology as disruptive tech for data networking. And, as someone who was deep in kind of centralized networks and knew all of the kind of design errors that come along with it, particularly in security, I got excited about what you could build on top of these distributed networks and the advantages that they have over, traditional infrastructure architectures. So, kind of started investing, following along. It wasn't until late 2020 when I started thinking about joining the industry full time. DeFi summer had just erupted, and I kind of felt the industry was at a point where it was mature enough for it was at a point where it needed kind of professional investment funds. I didn't see a lot out there, and thought I could take a lot of my experience across VC, but also public equities, create this hybrid sort of strategy, and launched a liquid token fund in early 2021 called Omnichain Capital. And people typically call liquid funds hedge funds, but this is really a liquid venture strategy where I underwrote investments looking over 5 to 10 years out, how the industry evolves specifically at the infrastructure level, what commoditizes, what accrues value, and from that angle, what assets kind of look the most attractive on a risk reward basis. So ran that for 3 years, had a good amount of success. It was just me running the fund, so I was looking to kind of expand, gain some scale, both resource wise, but also better access to capital. And so started talking to other funds. Eventually got connected with M31 late in 2023. Found it was a perfect kind of match for what they needed, for what I needed. And we ended up merging at the end of 23. And so we've been a combined entity for a little over a year now. I run the Web3 investment strategy, but that covers both our liquid fund as well as our VC operations. And given my experience and my past life in infrastructure technology, I definitely gravitate more towards infrastructure protocols, specifically co-processors, off-chain data, compute, AI, all that stuff. But now getting more and more into the application layer and trying to demonstrate this novel functionality. Feel it's always easier to show people than to explain abstract ideas. So it's kind of where we are today.
Well, that's very interesting. So you were working in the traditional financial world, and then you kind of made this leap, and you got interested in decentralized tech. So can you tell me a little about how your perspective, or what were the lessons that you kind of have carried from traditional financial world to this, the Web3 space?
Yeah, I think it's twofold. One, whether looking at kind of illiquid VC investments or even most of the liquid tokens out there, for the most part, they're still startups. And so they need to be kind of the framework to evaluate them needs to be more of a VC mindset than a hedge fund mindset, in my opinion, having done kind of both sides of the coin in traditional finance. And so, having that kind of base layer for assessing investments, I think gives me an advantage, especially on the liquid side of things. But then, kind of pairing in I spent 4.5 years at an equity hedge fund, long, short, and kind of understanding market dynamics, how they work, how to kind of eliminate emotion and human bias and try to come up with objective as possible decision making process. So it's kind of tying those two experiences together that I think gives me a unique kind of perspective on this industry, which, as I said, is kind of venture capital that happens to be liquid. And so you kind of need both perspectives, I think, to do well. And then it's, in my earlier stage and private equity days, definitely did a lot of working with the portfolio companies, facilitating cross-pollination, thinking about synergies, and definitely have taken those skill sets and applied them to across both of our both the liquid and illiquid portfolios. I think it's unique to be able to expose early stage technologies to more mature networks to help with scale, and then vice versa for the more mature networks to kind of be on the bleeding edge by partnering with these up and coming technologies that are less mature. So kind of taking a lot of the frameworks and kind of twisting them in a way that I think applies to this unique asset class of crypto.
Right. I think that is a good way to put it, that you have to kind of take those fundamentals and tweak it a little bit so that it'll fit in this particular mold. Can you elaborate a little bit more about what exactly does your role entail as the head of Web3 investments at M31 Capital?
Yeah, I mean, it's we're still not a huge fund, so everyone does a little bit of everything. But I would say by definition, I manage the liquid portfolio. So we run a portfolio of about 10 to 15 liquid tokens. And so, actively, we don't trade, but obviously with all the volatility and the advantage of liquidity in the space, manage that day to day. And then, with our VC investments, obviously it's both, looking at new investments and seeing what's interesting, working a lot hands-on with our portfolio companies. I actually, at OmniChain, I didn't have VC capabilities. And so, a lot of my research was basically reading stuff, writing stuff, talking to people. But I feel like the best research as a portfolio manager has been working, being hands-on, rolling up the sleeves and working closely with portfolio management teams, seeing what's really going on, what is real, what is marketing, what's fluff, why something won't work, why something will. And so I find a lot of the hands-on kind of interactions with the earlier stage companies that we have, significant investments in to be the best research for my liquid book. So I find a lot of synergies between the two. But in terms of role, it's really everything. Doing everything I can to to add value to our investments and to optimize our portfolio. To be a little general, sorry.
Right. No, I get that. I think that as you mentioned, during the initial stages, it has to be a very hands-on approach for everybody on the team. So I get that, and I can completely appreciate that perspective. But can you tell us a little about the criteria, perhaps, on how do you prioritize while evaluating, techs and potential investments in this space, and what should entrepreneurs who are perhaps pitching to you keep in mind?
I'll take the first part, and then I think the second part's a little different, but actually, I guess it's related. But I definitely take, versus a lot of liquid managers, I take more of a top-down approach to coming up with theses and thinking about the space. And so that means kind of having a full picture of the entire Web3 industry, from all the way down to the hardware, whether that be TEEs or GPUs, CPUs, and all the way up through the blockchain infra to the off-chain infra, compute, data storage, and basically, try to have a view on where things are going, where we've been, how things are progressing, where, having knowledge of how Web2 networking evolved and what worked and what didn't and what was advantageous. I apply a lot of that to the Web3 space and, kind of use that to inform my projection of how things are likely to evolve. And then, taking that view, seeing on the liquid side, what's being underappreciated, valuation wise and also narrative wise. And so, what do I think will be the narrative in, a couple of years or next year? And then, within that group, finding the best asset across both, tech, community/teams, as well as obviously valuation. And then, similar on the illiquid side, obviously, it's more kind of finding or attracting these types of companies before they get high valuations in the private markets and kind of hyped up. And so it's really more of a top down for me. And similarly, like on the what people should think about, I'm always thinking long term, which I think is not ironically, but unfortunately rare in this industry. And so I think that the exciting outcomes and the exciting potential for this tech isn't just filling new tokens on Twitter and kind of building infra that hasn't found product market fit. And I'm more what industries exist today that could actually benefit from the unique attributes of Web3 technology, and definitely try to bridge the gap a lot with traditional companies. We've been doing, our portfolio has been doing a lot of that lately, where we found specific use cases, whether it's secure and confidential compute or untamperable databases, private key management, I could be using Web2 as well, and and finding companies that don't care about blockchain or crypto or decentralization, but they really value and appreciate the novel functionality that a lot of these protocols can provide. And so it's like finding, and I think that's the easiest way, is you already have demand, you already have a product, and if you can supplement it and augment it through Web3, I think that's an easy way to bootstrap adoption for these networks. And so, long story short, it's kind of what's a big market outside of our bubble? Why would this technology be attractive either for new applications and companies or established applications or companies to use it? And beyond kind of ideology, I think ideology is great, and I think we've seen the past kind of 10 years how important having control over our data and information is, and not having it controlled by the state. But I think, more near term, it's got to be more focused on utility, functionality, and, not pitching people based off blockchain or, the attributes of decentralization, but more, here's why you will get value out of it, and here's why you will be a differentiated product versus your competitors. And so that's my North Star, and that can have a lot of different flavors, but kind of thinking bigger picture and TAMs that are, that maybe have nothing to do with blockchain today.
I think you're very right in both of your perspectives. How do you sort of approach what investment to sort of perhaps take on as a fund? I think that is an interesting approach to take. That you said you take a top-down approach, which I think is very sane, especially in this space. And then for the founders as well, the most important thing that you said, which is something that I reiterate a lot, is you have to be working for the long term. It has to be a long-term game, and if you're building something that perhaps will not find a PMF, and it is just something that will perhaps make you a quick buck and fizzle out, then that is not exactly a business. And I think those are good insights, and thank you for sharing that with us. You've also written a lot about the convergence of Web3 and AI. You've talked about it. What potential synergies do you foresee between these two technologies? And do you feel that is M31 Capital looking at it seriously? Because there are all of these AI tokens that have come up, and quite a few in the last few months. It has certainly slowed down a bit now, I think, but nevertheless, what's your perspective on the convergence of the tech, and how are you thinking of it, of this particular niche in terms of investment?
Yeah, so I'll start by simply saying I think they are natural complements of each other. As I said, in crypto, kind of disruptive tech for data networking, I kind of see this generative AI and kind of whatever it evolves into as being disruptive technology for kind of data processing, and because of that, I think they work hand in hand to kind of compound their value against each other. There are a lot of specific kind of examples of that. Having being able to control AI. A lot of the decelerator advocates out there are scared of the doomsday Skynet scenario, and not having very powerful AI fall in the hands of malicious actors. And crypto is a way to kind of solve that problem, where you can only access something and you can keep it confidential, and it's kind of bound by blockchain, by private keys, and so it's actually much safer than being in a centralized environment where it's easy to hack, easy to download, or insert malicious code. So there's a lot of the safety and the ownership aspects of it. I think a more recently, and I think a more near term kind of application and area is cloud computing. And public cloud computing has a lot of issues, but especially is not meant for, or not able to kind of support AI workloads. And I'll get into that. It's the bad thing about public cloud is you have these servers, they're run by companies, right? Amazon, Microsoft, Google, and so they get economies of scale. They get you get to outsource your compute and management of those resources. But the downside is they have single points of failure, and whether you trust Amazon or not, it's kind of doesn't really matter. The fact that if one kind of part of the network is compromised, everyone's kind of data is compromised, and we see this all the time. I feel like society is just numb to it in terms of all these data breaches. Literally every large company has been breached. The U.S. Social Security information has been breached. Our government, the U.S. government, internet providers, infrastructure, all of that. So if it has a single point of failure and it can be hacked, it will be hacked. And so this is a huge issue when it comes to specifically AI, because AI is powerful technology, but it's only as useful as the context that you give it, the data that you give it. If you have a personal assistant, they're not going to be very helpful if they don't have access to any of your files. They can't make appointments on your behalf. They can't buy stuff on your behalf. They can't, if they don't have access to this sensitive data, they're not very helpful. And so that's the same with AI. And so, all these cool use cases for personal financial advisors or traders, on the healthcare side, kind of managing your vitals and having your health history in kind of one place, so you don't need to keep filling out forms for new doctors, and then they don't have your history, and then it's kind of a mess there, as well as kind of identification information. I think it's kind of funny that we still use paper passports in 2025. I think it's kind of ridiculous, but it's a very hard problem to solve. Like, how do you store this digital information in a way that can't be hacked, but can be utilized and be convenient for people? And obviously there are a lot of crypto technologies working on that, but all that to say is, when it's on device, so on an iPhone, it's less of a problem when the compute's on device. But when it needs to tap into the public cloud, then you have a huge problem, because you can't encrypt it when it's being computed over yet. And so there's always this vulnerability that we know is breached all the time. And so, interesting, last year, Apple kind of announced their Apple Intelligence plans, bringing AI to the Apple ecosystem. And as part of that, there are some quotes where they basically said, not all of this compute can happen on device. And so because of that, we need to access the cloud, but public clouds are kind of like a non-starter because of how bad the security is. And so they've started to build out their own private cloud. And interestingly, it's built on TEEs, and it kind of has a similar mechanism as blockchain, where private keys and the management of the infrastructure is done by software that's on a ledger for everyone to see. The problem with it is it's not a blockchain, and so it's centralized. And so at the end of the day, all of that security is kind of a moot point if you get access to Apple's private cloud infrastructure security, or ledger, sorry. And so you could still get into everyone's data. And so this validates, I think, the blockchain orchestrated cloud model, where you have where you don't have a company, a single point of failure managing this infrastructure, but you have smart contracts, and your data, your resources can only be accessed if you have a private key. And so you can always get gun to my head, kind of give me your private key. I don't think you can really ever stop that. But in kind of the Web3 decentralized architecture, that thief can only take my data and my resources and not everyone else's. And so that's a much better way to kind of design a network, especially when it's going to be dealing with all this very really sensitive data, which by the way has a lot of regulations already on it. And so I think a lot of AI companies are having to build on-prem for enterprises and have a lot of issues that Web3 kind of, I call blockchain orchestrated cloud networks can solve very easily. And we're finding a lot of traction within our own portfolio with especially healthcare data companies, financial data companies, facial recognition companies that, again, nothing to do with blockchain, but kind of appreciate the functionality that only blockchain orchestrated networks can provide. And so I think it's a proven product market fit, and I think that there will be a lot more kind of near-term use cases once the tech progresses a bit, and once we kind of have more mature use cases of Web 2. Because I think everyone's kind of trying to figure out how best to use this technology, and so but that's a definite near-term opportunity for Web3 Rails.
Yeah, I think there are many different use cases that has kind of come up, and every day there is something new that keeps coming up, especially because this tech is so new, and I think just the speed at which the development is happening, that kind of makes it even more exciting, because new things keep coming up every day. We used to think that Web3 is moving at a fast pace, but with the advent of AI, I think that has grown multifold. What is your take on AI tokens, in terms of in the space, and what do you think about AI agents getting, say, financial privileges in certain apps that are now coming up?
Yeah, I mean, I think the AI space is like anything else in Web3. The vast majority of it is worthless, to be blunt.
Right.
Has a lot of either has good intentions, but is very far from being a product and having product market fit, to more malicious intent and smoke and mirrors in marketing and just people trying to take advantage of the narrative. I do think there are absolutely projects out there that are liquid, that have real value and are solving real problems today, or are working towards building something that people will care about. But it's definitely it's nuanced. You have to really dig deep into it, and but like anything else, right? Same with kind of blockchain tech and compute tech and gaming and all that stuff. You really need to dig in to know what's real and what's not. What was the second question? Sorry.
So I was trying to understand your perspective, whether how comfortable do you feel about
AI agents?
Yeah.
Yeah. No, I think I've been talking to AI agents for a while, and kind of, again, I'm always thinking kind of 5 years ahead, like what could they possibly turn into? This is back in like 2023. And so that's actually how I got very into the coprocessor theme. So meaning, off-chain compute that is decentralized, but also verifiable. And so the verifiability is really important. And there are a lot of ways to do that, but it essentially allows the data output from that compute system to be permissionless in that it's decentralized, but then trustless because it's verifiable. And then, you can basically integrate it directly with a smart contract, and it essentially becomes, an extension of that smart contract. And so that's how you really that's where the AI on chain, quote unquote, kind of comes from, when it's really not happening on chain, but you connect it through, verifiable compute. And so I got very excited about that, because that's how you get agents to do interesting things, right? I think, we saw an explosion in 2020 of kind of innovation with DeFi summer, and that really stemmed from the composability aspect of smart contracts, especially when you pair that with data oracles, which Chainlink launched in mid 2019. But that really supplemented the design space of these on-chain smart contracts. And then you saw this kind of explosion in DeFi innovation, where every other day there was a new idea built on another one, and it was very fast-paced and exciting. I think for me, I think the same thing is happening right now in I guess the AI agent space, but with the co-processing technology, which is, if you really want an autonomous being that is governed by smart contracts and provably not tampered with, as we kind of saw with the terminal of truths example. It's hard to know is the dev running the wallet, is the dev in charge of the tweets. How do you even know that? But with verifiability on chain, you can prove that cryptographically. And so I think that there are there's a lot of experiments today, which are, I think great. There's a lot of funding. Obviously, most of it won't turn out to be anything, but I think the stuff that actually turns out to be something will probably be unexpected. One thing I will say is I think the human to machine capabilities of this tech is very interesting, especially on the co-pilot front. I think AI agents are actually their product market fit are more on kind of the back end and machine to machine communications and composability. And what I mean by that is, we have the really cool part about Web3 is we have all this permissionless, trustless, modules or, Legos, whatever, beyond money Legos. Now you have compute, data, all these other pieces. The blockchain is split up into modules now. And so, I kind of see a future where you kind of give a co-pilot an intent, whatever that is, and AI agents will it's kind of like intent for DeFi, but AI agents will kind of figure out how to put stuff together in a way. An example of this is, let's say I want a movie with my likeness and my personal data that ties in IP from, I don't know, some movie and creates a tokenized token gated asset that I want sold on the internet or something. I literally just made this up. I don't know where that came from, but basically you tell that to an agent, they round up the generative AI video, tech, maybe from LivePeer, the IP, maybe from, Sonium, my data, maybe from a secure, confidential, storage network where I have everything stored. It pays for it, with whatever crypto stable coins or crypto is necessary. It figures out, it optimizes, the cheapest, the safest, the fastest way to do this. And then it, tokenizes it and, starts to sell it, and I get to profit from it. I kind of think that is the huge unlock. And I think we're actually pretty close to something like that. But, I see most of the discourse on agents, more surrounding, these Twitter bots or whatever. But I think the more interesting stuff is going to be kind of machine to machine, optimization or automation.
Yeah, I agree. I think right now, even though there's a lot of there is a lot of innovation happening there, or innovation in the name of innovation is happening there, but real use cases are quite a few, and not as numerous as they can be. And the potential, I think, has not been exercised entirely. I think a lot of what is happening can be done perhaps with a simpler user flow, and it does need not necessarily be an AI agent doing an XYZ thing. And then again, I also think that because this is something that has become popular of late, a lot of people have joined, kind of jumped on that bandwagon, and they want to say that they are, putting in an AI agent where perhaps none is required. This reminds me a lot of how, a lot of entrepreneurs started jumping on the, during the bull market that happens every time, they'll jump on the Web3 train or whatever other niche that is doing really well, and they'll add that to their pitch. And at times, you really need to ask yourself, is that even necessary? That incorporation, or would your product be better off without it?
Exactly. No, I think, just to dovetail off that, I think there are a lot of quote unquote Web3 AI projects gets that,
Yeah.
the product has nothing to do with Web3. It just has a token. That's not even, that's not even really integrated with the agent. And, so exactly. Why do you need a token for that? Completely agree.
Yeah. You have to ask yourself, is this even necessary? Is it going to make the product more viable in some way? Is it going to make it more scalable? Is it going to make it more palatable, perhaps, for the user? But there has to be a very compelling reason if you are changing or adding to your tech stack in any way. So, what kind of this is like, I'm zooming out a little bit and now I'm going to touch upon a regulatory perspective, basically. And I wanted to understand from you what kind of proactive measures should crypto firms consider in anticipation of regulatory changes that keep happening. And I'm asking you this because obviously you come from a traditional financial background and you've made that leap into Web3 and this new age finance. And obviously in traditional finance, everything is a little black and white mostly. And the rules are already there and the regulations are already there, licenses are already there. But when you enter into this area, I think it becomes a little gray and it's a little dynamic. So how can crypto firms be proactive in this regard?
Yeah, definitely agree with that. And, since I got interested in Bitcoin in 2014, I've been waiting on, regulations. I've always felt that was the overhang on the asset class, on the industry was, we can never get real money or talent into the space until we have real regulations that kind of changes the how it's viewed by the rest of the world, makes it more legitimate. And so, I think everything that's happening with this new administration in the US has been very positive, kind of getting people who understand the technology into places of decision-making power, all of these kind of industry groups to kind of actually in good faith, take advice and gauge, what's really happening in the industry from leaders who know best, working with lawmakers who are actually getting up to speed on the tech. And it's important because, I feel like tokens, obviously every token is different, but it's not equity and it's not a commodity. It's a new asset class. And it has nuances where, rules of either don't really make sense for it. And so I've always thought they needed kind of a completely kind of separate rule book that both, makes it a safe environment, discourages fraud and market manipulation, but also doesn't, ruin the core tenets of what makes crypto valuable, and then, doesn't kind of stifle innovation or funding or debanking. And so I do think what's happening is good. Obviously, how it'll turn out, it's anyone's guess. I mean, there are bills being especially on the stablecoin front being, composed today, but what will actually be passed is another story. So it's up in the air. But on the one hand, I think it's very positive. We've had all this fraud and all this, all these bad actors that have been attracted to the space. I think a huge part of that, if not the biggest driver of that, has been this gray area regulatory space where, bad actors love that. The early internet, they loved that. When phones first came out, the first huge use case was scammers on calling. And so until there are
the scammers will always get there first.
They never left.
Yeah.
Well, they also never left the phone. I guess it works. But to have Gary Gensler always talked about protecting the investor, but he literally missed every huge scam, especially FTX in the industry, and it seems to be the good actors that they've historically gone after. And so I think it'll create both on the growth side and innovation side. It'll help by legitimizing the asset class, but also we need a lot of reworking of market structure in the crypto space and kind of making it a little more fair for retail versus kind of insiders, which is kind of ironic given the ethos of Web3. But the way things are set up today, it doesn't incentivize the best behavior. And then another part of it is being proactive on education, especially funds that have connections into DC or the resources to kind of make the investment to educate lawmakers. I think specifically in the cybersecurity standpoint, explaining or educating, lawmakers on why a blockchain orchestrated network should be kind of mandated by the government for all healthcare and financial data because it is much more secure. But people, it takes a while to kind of get that. And so as well as, how do we get elections to be digital? I don't think it's on chain or quote unquote on chain, but it's, blockchain orchestrated confidential databases like space and time, which is ZK, a co-processor, but specifically for databases. And that can be used for elections, for following treasury management, for making sure companies aren't cooking their books. I think adoption will greatly accelerate if we can get the government to actually mandate this stuff. But they need to be educated first, and I think that's on all of us to kind of show lawmakers and decision makers the real value that this industry can bring. Beyond the memes and most of what gets talked about on mainstream media.
Yes, I think I completely agree with that kind of cohesive way that perhaps, you can stay a little on top of these regulations. I think the onus falls a lot on the builders that, they kind of put in the right ideas, the narrative, and they try to rectify perhaps the perception that people hold around this industry. And education would obviously be a very key part here. It still seems like an uphill battle, but I think I'm hopeful that, we'll get there.
Yeah, I mean, a year ago, I would have been like, yeah, probably 5 years away. But now you have Elon Musk tweeting about putting the treasury, management on chain. You have all of these, you have a crypto czar, you have a crypto industry group, and whatever the intentions of politicians are, crypto has a very big influence in politics now. And so if you want re-election, you're gonna have to appease the crypto industry. And which, that's just politics. But I think the amount of progress in the past year has been astounding. And I, probably in 2014, I would have thought, okay, by 2025, that makes sense. But, if you told me last year where we are today, I almost wouldn't believe it. And so I'm highly optimistic. I think there's a lot of work to do, but the fact that politicians are now incentivized to do, to actually look at this stuff practically, I think, is the huge turning point in the industry. And you're seeing it with all the SEC overturn rulings. Uniswap yesterday, and Coinbase, and all of these companies that shouldn't have been bothered in the first place. You have all of this choke with the banking choke point stuff coming out on, yes, they really did debank crypto companies. And so, I think all of this is really, really positive. It'll definitely take time. It'll take iterations. But I've never been this optimistic on both regulation for the space and also just integration and the government kind of promoting this technology as a way to increase trust in institutions, which is at an all-time low.
Yeah, I think I'm fairly bullish here as well, because I think things have changed very rapidly, and things have changed for the better. Even though it seems like an uphill battle, I do think that because at the pace at which things are moving, and now because there are more and more people and important people in power who understand the kind of impact this industry can have. Like you mentioned, if you want to get re-elected, this is something that you will have to take seriously. So that, I think, itself says a lot about how far we have come as an industry. There is always more that we can do and more that needs to be done, but we'll get there. So pretty much like you, I'm fairly bullish as well. David, now I've just seen the time and I realized that we are running dangerously out of time, but I would this has been a wonderful conversation, hearing your insights about the space, and generally your experience has been very insightful, and I'm sure our listeners would have enjoyed this particular conversation so far. But I think I'll be remiss if I let you go without asking these two questions, which are going to be the last two questions that I'll ask you for this recording. So the penultimate question is, can you tell us a little about your portfolio at M31? What are the kind of niches in which you have invested, and the kind of founders you've put your bet on?
Yeah, and I'll kind of mix the liquid portfolio and the illiquid venture portfolio together, because I do think of it as the same strategy, since we're long term on the liquid side as well. But So I'm thinking long term. I'm thinking what actually has a specific utility that has a specific novel utility that would add value to different industries. And I think the most obvious one, or the lowest hanging fruit for the past decade, has been financial services, right? There are a lot of obvious advantages, cost savings to using crypto rails. The financial industry is obviously it's very antiquated. There are 10 intermediaries between making a purchase on your credit card to that company getting paid, and so it's absolutely ripe for disruption. And so the issue has actually been regulatory. So this is another unlock of having knowledgeable people in power is getting a stablecoin law, getting a let's get securities on chain, because there's a lot that will unlock in terms of cost savings and efficiency, but also functionality. Being able to tokenize different assets in one thing, being able to have things composable together. I think a really obvious one is having your cash be yield bearing at all times and without having to do anything. Also, that'll help our Treasury Department, which is in dire need for demand for their for their USTs. But and so around that, definitely think that that's a real and enormous TAM. And so kind of the infrastructure that enables that. I think besides regulatory, the issue has been bridging traditional finance with blockchain. And we're creatures of habit. We don't want to learn new things. And so especially something hairy like crypto, you want to abstract away as much as possible, make it as safe as possible, make it as easy as possible, but also demonstrate the value to make people actually experiment on it, right? Because a big bank isn't going to take a chance on it if they don't really have a reward for the reputation risk that's decreasing now, but that exists. And so very bullish on kind of Chainlink and all of these RWA enablers, particularly on the demand side, which has been the bottleneck to date. And then, kind of on the more general purpose infrastructure focused area, I've been investing in DePIN before it was a term, as well as kind of, these Web3 AI protocols, the GPU networks before, ChatGPT exploded. And so I've, kind of been always focused on this area. I think there are a lot of advantages having distributed compute and maybe on the cost side, but a lot on the functionality side. And so, definitely a lot on co-processors, as I mentioned, in terms of supercharging smart contract. A big thesis of ours is data oracles unlock DeFi summer, but we really haven't had any material innovation since. There's been too much focus, in my opinion, on the execution layer. We've had all of these advancements in throughput and finality and parallelization, but those chains are just have copy paste application. Like there's no new innovation that these have opened up. I think that innovation will open up with co-processing and getting off-chain resources integrated directly with smart contracts, whether that's compute, storage, database management, or the like. And so, a lot of that type of technology, which I think today is only possible with TEE. And, I think ZK and FHE will eventually become practical. And when I say practical, I mean like cost and latency wise. But, I think for any kind of high intensity compute or storage need today, I think TEEs are the only way to really verify those resources in a practical, efficient manner. And more and more, as I said, kind of on the VC side, been focusing on taking maybe either Web 2 or Web 3 adjacent applications, with product market fit, but kind of integrating them into the Web 3 space, thinking of ways that they can leverage our full stack portfolio of Web3 rails to, again, as I said earlier, kind of supplement and augment their product offerings. So, a lot more on practical applications of this tech. I've always historically have been, very interested on investing in infrastructure I thought would enable novel functionality and that the market would kind of figure it out. I think we're at that point. And rather than wait for the market to figure out, we've been very proactive in pinpointing the real, at least the near term pockets of the market that could really benefit from this and making it happen. So, I don't know, there's probably much more in our portfolio, but those are the ones that stand out.
Yeah, I think that, you kind of shared your entire investment thesis with us, the motivation with which you go after these companies that are actually building sustainable long-term solutions in the Web3 space. So thank you for sharing that. Now, David, on to my last question, which is something I ask everybody who comes on the show. You're somebody who made a leap from traditional finance to Web3 finance, so to say. If you had to give two suggestions to somebody who's perhaps grappling with the same perception problem that the Web3 space has, and they are still not sure whether they want to delve into this technology and start working in it, what will be your top two suggestions for them so that they can truly start living on blockchain?
Yeah, I mean, I think in general, I think generally speaking, people should follow what they're interested in. I think it's on us to make Web3 tech interesting for Web2 investors or traditional investors and Web2 developers. I'm not gonna. I think that's when you get the real innovative contributors is when they're fully buy into the tech, to the potential, to the the ethos, all of that stuff. So it's really it's kind of like religion. You can't really force it on someone. But if you're curious and if you're kind of on the fence, something that I'll give a free plug here to a media outlet that I have no association with. But what got me very comfortable when I was making a decision was Real Vision Crypto. They have a lot of these interviews with a lot of TradFi people, a lot of really smart technologists, and very just kind of sophisticated level conversations. And, I was kind of blown away at how much talent was already in Web3, both on the investor side, but also on the tech side. And, for me, covering the tech space in Web2, it was like, it was beyond the ambition, the excitement, innovation was like nothing, in Web2, where you're looking at like B2B SaaS companies. It's like, all right. So, for me, it was kind of seeing these very, very legitimate people talk very, very eloquently and logically and practically about the technology that got me to, gave me confidence to dig deeper. And, clearly I got kind of sucked in, but, I think it depends, what you're interested in, what part of Web3 kind of has a piece of, something for everyone, from creative to philosophical to economics to finance to tech. And so, I would seek out kind of the leaders in whatever vertical you're interested in and hear them talk. There's something different about reading analysts and reading media, which I would tell people not to read mainstream media about Web3 because it's all terrible. But hearing someone talk about it, seeing their emotion, really I think gave me the insight to realize that this is very real. That some of the smartest and most ambitious people are building in this space for intentions beyond just getting rich, and so that would be my kind of suggestion. And thankful to Real Vision for making their videos free. Again, no association to them, but I will give them a shout out because they were integral in me kind of finally making the decision to hop from traditional finance.
Right. Yeah, I think those are very good, insightful suggestions. I think a lot of people give very superficial suggestions at times. I think what you've shared is truly deeply personal from your perspective, and I think it'll resonate with a lot of people as well. So thank you once again, David, for making the time to speak to me today. This has been a truly wonderful chat, and I'm very grateful that you could make the time.
Yeah, thank you for having me on. Had a good time.
Likewise.